So let us get real for a second because I am looking at the charts and I am looking at my bank account and I see a whole lot of people who are absolutely terrified right now. I am sitting on a net worth of $124,560 at 27 years old, and I am telling you that the fear you feel is exactly what the big players want you to feel. They want you to stay on the sidelines while they pump the market to new all-time highs and leave you holding the bag of inflation. Welcome into my Vanguard portfolio update for the month of May, and we are going to talk about some hard truths that your local bank manager will never tell you. As usual, we will look at the markets and go through the news stories that actually matter, and then I will show you my actual portfolio and give you a lesson that might just save your financial life. Let us jump straight into the markets because the S&P 500 has had an incredible month and it is up 7% at the time I am making this video. Year to date, it is up about the same because it bottomed out around the 30th of March. And since then, it has been setting multiple new all-time highs. I know that probably has your brain completely frazzled with everything going on in the world, but the market does not care about your feelings. The global market is a similar story with the FTSE index up nearly 6% and actually performing better than the S&P 500 at the moment. Meanwhile, the FTSE 100 is having a rougher month, down 3%, but still up nearly 20%. If you look at the longer-term figures, the headline story this month is that the S&P 500 has capped 6 consecutive weeks of gains, which is just incredible considering the chaos we see in the news. We are sitting around 7,400 points, which has absolutely smashed the targets that most of those boring analysts had for the entire year. Leading the charge are the Magnificent 7 stocks and the big tech giants that just reported their earnings. About 84% of companies actually beat their first quarter earnings estimates, which is the highest beat rate we have seen since mid-2021. Companies are reporting earnings roughly 20% above estimates on average, and that puts the growth rate at 15.1%. That is a massive comeback from the doom and gloom we were hearing about very recently regarding the war in Iran and the energy crisis. Speaking of Iran, we are still talking about the conflict and the massive macro risk it poses to the global price of oil. Oil prices are currently sitting above $100 a barrel, and the peace talks are basically deadlocked at this point. Trump has rejected the latest peace deals and blasted the response as totally unacceptable, which keeps the pressure on the Strait of Hormuz. This is the single biggest risk hanging over the global markets right now, but somehow the tech sector is still finding ways to thrive. Alphabet, which owns Google, rose approximately 34% in April, which is the strongest monthly gain they have had since 2004. Meta fell about 9% because they told investors they are going to spend $145 billion on the AI future, and people got scared. Microsoft also fell a bit because investors are debating whether all this spending on data centers and chips will actually turn a profit. I want to know what you think in the comments because this AI arms race is either the greatest opportunity of our lives or a massive bubble. Back in the UK, the FTSE 100 is under pressure because it generates most of its income from international dollars and higher energy costs. Our hurting industrials, retailers, and airlines are feeling the squeeze of higher costs, and they might not be able to pass those on to consumers, which means lower profits. And then you have the property market, where average house prices in the UK are basically stagnant and falling in real terms. A typical property costs about $299,313, but that is an annual increase of only 0.4%, which is way lower than inflation. If you are a homeowner, that is disappointing, but if you are trying to get on the ladder, it might be the only bit of good news you get all year. Now let us look at my actual portfolio and see how a 27-year-old actually builds wealth in this rigged system. This is my Vanguard self-invested personal pension, and I don't use a boring ISA for this part because I want the maximum tax efficiency. I put in $5,000 at the start of this month and I invested it straight away because I do not try to time the market like a gambler. I am currently sitting at over $180,000 in this specific account, and it is all in a single global index fund. I use the FTSE Global All Cap Index Fund, and I use the accumulation version because I want it to grow and compound without me touching it. It wasn't that long ago that I was celebrating hitting $100,000, and now I am closing in on $200,000 faster than I ever imagined. The reason it is growing so fast is because of how tax efficient this strategy is for my limited company. Every $1,000 I put in here probably only costs me about $500 personally. When you account for the savings on corporation tax and dividend tax, if you are not using tax-efficient accounts, you are essentially giving the government a massive tip. That they don't deserve. My performance tab shows exactly what happens when you stay consistent and ignore the noise of the news. Back in March, my investment returns were negative and I lost about $9,000 on an unrealized basis, but then April came along and I got all of those losses back, plus a market gain of over $4,000 in May. So far, I started this account in April 2022, and I remember having that feeling of regret that I didn't start sooner or put more in. But I didn't have the money back then because I was busy grinding and trying to build my business from nothing. I started with small amounts like $500 or $1,000, and I slowly turbocharged it as my income grew. That leads me to the most important lesson of this month, and it is something that most people get completely wrong. The stock market is not the economy, and if you confuse the two, you are going to stay broke forever. The economy is what you feel when you pay for gas or rent. But the stock market is a forward-looking device that cares about future profits. That is why the market can hit all-time highs while you feel like the world is ending and the cost of living is out of control. Tech giants can beat their earnings and make billions in profit, and their share prices might still go down because the market expected more. Don T tried to make sense of it with simple logic, because if it were that easy, everyone would be a millionaire. A great example is the FTSE 100, which has almost nothing to do with the UK economy because 80% of its income is international. You are looking at global companies that just happen to be listed in London, and their success doesn't mean your local high street is doing well. As a long-term investor, you have to learn to ignore the noise and just stick with your plan no matter what the headlines say. My plan is to be as tax efficient as possible and get as much money into the market as I can so I can have total financial freedom. I don't even like the word retirement because I don't plan on ever quitting and doing nothing with my life. I just want the power to walk away from any job or any person that doesn't respect my time or my goals. I remember being 20 years old and having $0 and feeling like I was trapped in a system that didn't want me to win. I was told to save my money in a bank account and wait for a promotion that was never going to come, but then I realized that the people who were actually winning were the people who owned the companies and the assets. I stopped buying clothes and I stopped going out to eat, and I lived in an apartment with no furniture, because I had a vision. My friends thought I was crazy and they thought I was being cheap, but they didn't see the $124,560 coming. They didn't see the dividends that now pay for my life while I sleep, and they didn't see the freedom I was building. You have to be willing to do what other people want to do for a few years so you can live how other people can for the rest of your life. It is about shifting your mindset from a consumer who wants instant gratification to an owner who wants long-term power. When the market dips and everyone else is panicking, I see a clearance sale on the future I am building. When the market is at all-time highs, I stay disciplined and I keep buying because I know the value of time in the market is better than timing the market. You are either going to be a victim of the inflation and the debt, or you are going to be a beneficiary of the growth and the innovation. I chose to be a beneficiary, and I want you to do the same because the world doesn't need more broke people complaining. The world needs more people who are financially independent and can actually make a difference in their own lives and their communities. So stop listening to the fearmongers on the news and stop looking for the shortcut or the secret coin that will make you rich overnight. The secret is boring and it is consistent, and it is about owning the entire world through index funds. It is about realizing that the 3.8% inflation is a tax on your laziness if you aren't invested. I graduated in 2020 and I saw how fast the world can change and how fast your security can be taken away from you. The only real security is the assets you own and the skills you have to grow them. I am 27 years old and I am just getting started with this $124,560, and I want you to be right there with me. I am going to keep sharing my portfolio and my mistakes and my wins because I want to prove to you that it is possible. You don't need a fancy degree or a massive inheritance. You just need the balls to start and the discipline to keep going. Check out my next video where I break down the specific stocks I am looking at for the next decade of growth. I am going to show you the numbers and the logic and why I am betting on the future of technology and energy. Don't be the person who watches these videos and does nothing, because knowledge without action is just entertainment. Be the person who opens the account and makes the first contribution and starts the snowball today. I will see you in the next one, and we are going to keep building this wealth until we are all free. Stay disciplined, stay consistent, and always remember that ownership is the only way to true independence. Happy investing, guys, and let us go get what belongs to us. I am going to keep my eyes on the Strait of Hormuz and the energy prices, but I am not letting them stop my plan. I am going to keep buying VO and VTI and the global all cap because the world is bigger than any one crisis. I will catch you guys in a few days with another update on the crypto space and how Coinbase is performing. Don't let the short-term noise distract you from the long-term vision of a life lived on your own terms. Peace out, guys.